Did you know that investigations into the world's largest electric vehicle market revealed surprising tactics that changed how billions of dollars flowed internationally and could even reshape the power balance between the US dollar and the euro? Few people realize that scandals far from home sometimes ripple straight into American wallets and global trade. Let's dive into what really happened. Over recent years, audits exposed widespread subsidy fraud in China's booming EV sector. Giant automakers like BYD and Chery were found to have falsely claimed government payouts by registering unsold vehicles as if they'd hit the road, leveraging missing sales certificates or relying on loopholes. In one snapshot, more than $121 million in subsidies were discovered as improperly claimed between 2016 and 2020, with individual car makers flagged for thousands of vehicles. This wasn't just a blip. Regulators warned that thousands of dealerships could be complicit, raising deep concerns about transparency and fair play in China's rapid push for global EV leadership. But why does this matter for Americans or for the world's currencies? The fallout from China's EV scandal went far beyond local headlines. For U.S. consumers and policymakers, the story resonated because it touched on multiple familiar worries: fair trade, job security, and the sense that the rules of global commerce weren't being enforced. Reports about fraudulent subsidies fueled calls for stricter tariffs and trade barriers. Officials debated new policies to shield American manufacturing from what many saw as unfair competition stemming from artificial price advantages created by misleading subsidies. This pushback sent shockwaves through international markets. When large trading economies like the US and Europe rethink their relationships with China, imposing new checks or restrictions, the resulting volatility affects currency values and investor confidence. In this period, the dollar began to stumble. Data from early and mid-2025 showed the euro rising to its highest level against the dollar in 3 years. On some days, 1 euro bought as much as $1.14, marking a nearly 9% drop in the value of the dollar compared to the previous year. Why did this shift occur? Partly it was about perception. Investors worldwide track signals of economic strength, trust in policy, and growth prospects. Headlines about fraud and policy uncertainty, whether in Beijing or Washington, matter deeply. During the fallout, the Federal Reserve faced slow economic data, a contracting services sector, lukewarm hiring, uncertainty in manufacturing, and ongoing trade tensions all playing a role. Some investors saw Europe as relatively stable, especially with the European Central Bank maintaining strong monetary policy. Global funds often move fast to wherever seems safest or most profitable, and for a time, that wasn't the dollar. It's important to consider how these moves influence everyday life. As the dollar weakens, imported goods become more expensive for Americans, impacting budgets and driving inflationary concerns. Meanwhile, U.S. exports can become more competitive abroad, helping some industries while hurting others. Consumers notice these changes at the dealership, the grocery store, and when traveling overseas. Data shows that what's at stake is more than just numbers. Episodes like China's EV scandal challenge how fair competition is perceived and prompt deeper debate about the U.S. role as a global economic leader. Americans are attentive. Mistrust towards foreign-made vehicles, worries about job losses, and skepticism about policy all play into how the public reacts. There's a balancing act between the desire for affordable, innovative products and the anxiety about losing ground in a fast-changing global economy. In the end, the connection between subsidy scandals abroad and the dollar standing at home illustrates an important lesson. Global markets are connected, and events in one corner of the world can quickly shift fortunes everywhere. What do you think? Is the dollar's slide a sign of deeper trouble, or does it simply reflect the ebb and flow of a complex, interconnected world economy? Share your thoughts below and join a thoughtful conversation on how these issues affect all of us.